Hi, and welcome to Business Advisory and Tax Tips. Today, I've got some special guests, and we're going to be discussing, are you building a business or are you going to work? But first, I'm Michelle Burke, coming to you live from Annapolis, Maryland. Many of you know that after 30 years as a CPA and a tax accountant, I went out on my own in January last year and created health and taxes. There are only two things certain in the world: death and taxes. So I'm here to help you flip that to health and less taxes. I come to you live every Wednesday at 5 p.m. Eastern to advise you on some business advice, give you some tax tips, just educate you a little bit as a business owner, and giving you some food for thought of things you should be thinking about as you grow your business. So I think today's topic, are you building a business or going to work, is a really good thing for you to be thinking about. So with that, let me introduce my two guests today. I'm very excited to have them here. First, we have Michael Sims. Hi, Michael.
Good afternoon.
Michael is the president of Veracity Financial Services, also called Veracity Advisors. He's a business and wealth coach. He's a high-impact business, tax, wealth coach, disrupting the CPA referral model while delivering uncommon results for clients. Veracity Advisors has invested in and employed the CPA team-based model and work as coaches to CPAs, accounting firms, and business owners, employing knowledge in a national network of resources to guide and deliver holistic and advanced planning solutions for clients. For business owners and individuals, it is Veracity's responsibility to uncover and reveal the solutions which best achieve their goals and represent Veracity's clients in the specific industries which deliver solutions. Continually building strategic partnerships with certified public accountants and attorneys is the best way to enhance the client experience. And we'll talk more about that. So welcome, Michael.
Thank you.
And next we have Jason Cartier. Jason, welcome.
Thank you, Michelle. Thanks for having us on today.
Absolutely. It's my pleasure to have you guys here. So Jason is a senior financial planner with Veracity Advisors. He spent more than 13 years in financial services with companies like AIG, Morgan Stanley, National Life Group, and JP Morgan Chase. Jason has a keen ability to manage investment portfolios and asset allocation models with strategic partners while making sure clients' needs, goals, and priorities are properly aligned to effectively manage risk. He's developed signature client first, client always way of doing business with the goal of creating outstanding client experiences that exceed expectations. Jason joined Veracity Advisors because of their mutual focus on respect for top quality client service. Veracity Advisors developed a method of service that helps both advance both the financial planning process and the bond with other professionals building with their clients. And we'll talk about that here in just a second. With that, approach that Veracity Advisors has with their CPAs and clients. So Jason, you want to just jump in and explain that a little more?
Absolutely. Thanks again, Michelle. I appreciate you having us on. So with Veracity Advisors, Michelle, what we've developed is sort of a niche way of doing business. The traditional mindset was something that Michael and I and Adam, all three of us used, I think, entering the business, and continued with that approach for probably about half of the time we've been in. I came from a different side of the business. Michael and Adam had already started Veracity Advisors, and starting in the business with them, I knew they had transitioned over to the model that we're going to be currently talking about today. And the whole idea behind this, Michelle, was the traditional approach of working with retail folks in the industry, but something that to us was, being part of the rat race, for lack of a better phrase. We wanted to really transition. We really wanted to transition and work uniquely, kind of following the blue ocean model, swim with no competition, and build from there. And we developed, I think, a way of doing that. I mentioned to you early on, we always wanted to work with other like-minded professionals in the industry, and felt the CPA route was probably the most efficient way to go. All three of us have experienced some communication breakdown, I think, with professionals in the industry. And I know some financial planning has been done by me, Michael as well, where plans have been put together. And because there was that lack of working together in communication, clients of ours brought these plans to accountants of theirs, and nothing ever happened. And we just didn't want to see that happen going forward anymore. We wanted to develop a model that was cohesive, that was collaborative, really with the design, Michelle, to put the client first, client always right in the front, but having a group of folks work with each other for the benefit of the client is kind of how we saw this model unfolding. So here we are today talking specifically about that. What we've done with our process, Michelle, is build with the most trusted advisor. Obviously, you being a certified public accountant, statistics show that CPAs are very well regarded by their clients as being that tip of the sword person. We felt we could bring value in our approach and what we do to help you and your clientele really build off that brand of bringing value in-house and creating a win-win scenario, obviously with the client being first, but if done right and done effectively, we could really build something that at the end of the day, we're going to be happy with, but most importantly, the client is going to reap the rewards of communication coming together by all professionals, whoever we're working with. It may be an attorney, it may be a CPA. We have other specialists that are part of the team, but instead of getting advice coming in from different parties, it's all under one roof. We're all collaborating on it for the benefit of the client. I think it just makes it more efficient.
Yeah, Jason, I'm really looking forward to collaborating with you guys, because I agree. As a trusted advisor, I see a lot of information from my clients, and it's really nice to be able to collaborate not only with financial planners, but also with attorneys, other specialists. And you're right, just have one communication where we're all collaborating and working together to look at someone's whole financial picture and not just a piece, right? To be able to see that whole picture, we can really add value to that client in many, many ways, and make sure that we're doing everything in the most efficient way and the best for them, right?
Well, and Michelle, I think it boils down to the fact that most clients are not aware of the intrinsic biases of the advisors that they select. And you can interview every CPA down the block and ask them, what do you think of financial advisors or insurance agents? There's not a high regard, because they've all been bothered ad nauseum with the new advisor who's been trained, go out to every CPA and try to sell them. And so there's not that trust, and there's a that intrinsic bias. If you ask financial advisors, what do you think of CPAs? Oh, they're stodgy. They don't see the vision there. So how do you get the two to work for you? And, in most cases, if the client doesn't insist they get in the room and work together, then they won't. And the client's really the one who's being shortchanged. So we, Adam and I both came into this field with extensive histories in business and entrepreneurism, not in the financial services, and said, this just isn't right. We've got to figure this out. So it's why we do what we do. And we met Jason. We've known him for years. And we've been talking to him and saying, hey, this is time. It's right. Let's start doing this. So.
Great, Michael. It's so true. I love the whole thing of collaboration with high regard to professionalism, and the client is first. So today we really want to focus a little bit on owners out there listening, and they were wondering, what does it mean building your business versus going to work? Maybe, Michael, you can start by telling us a little bit more your thoughts on that.
So I worked, I only claim to be 35 years old. I've celebrated that birthday now 23 times. So, but I had about a 23-year experience in large business and small business, launching small technology businesses prior to coming into this industry. And, my focal point was always, hey, how do we engage with business owners to help them plan? Their largest component of wealth is their business. And most financial advisors pay lip service to that. They don't really have advice or direction or relationships to help the business owner grow the 80% of their wealth. They're willing to look only at the 20% that they might have invested and be satisfied with that. And we said, whoa, business owners, how do we advise and consult on the business end? And then how do we look at that to help the business owner with the transition? 69, 70% of business owners, small business owners, plan to exit their business within the next 10 years. That's the baby boomers coming through and transitioning that business wealth to another generation. And so the big question is, is your business sellable? How, what's it worth? And people are thinking of all these concepts and ideas and trying to get engaged with business owners to consider it. And, it's funny, 68% of business owners haven't even discussed what their concept or idea is for leaving their business with their spouse or their family. We were having a brief conversation early on about my family who had a business in Alaska. It was the longest continuously owned family business in the state of Alaska. And the fourth generation that ran it woke up one morning and said, well, we didn't get a buyer for our listing, and they just locked the doors. Oh. They never spoke to family members. They never saw all the various avenues that they could exit and the business could then succeed. But that's really where that's been my niche. That's where I've been wanting to focus. How do we help that business owner? And one of the elements that I came across was how many business owners are actually building a business that they can liquidate.
Right.
And, oftentimes business owners don't want to talk about their exit because there's the finality of it. Much like sitting around the table with a family talking about life insurance. Well, you could die. Well, they don't want to think about the mortality of that. But understanding that how you build your business and how you operate your business determines your ability to transition out of it with a financial windfall and a financial legacy that you've desired. And the first time I was looking at numbers and analyzing and going through some exercises, I thought, if you can't take 6 weeks of vacation in a year as a business owner, whether all in one, round the world trip or 6 weeks throughout the year or 12 half weeks throughout it, but if you can't take that amount of time away from your business and it sustains operations, it's probably not sellable. It's probably too dependent upon the owner. It's just a job. What you've created is a high-paying job.
right? I think a lot of small business owners make that mistake where they, it's whether maybe they don't trust people or they just haven't trained people, but they can't get away from their own business. And that's one of the reasons I talk about the health of the business owner, because they need to be thinking about, hey, I'm in this business so I can step away, so I can have a vacation, so I can enjoy my family and not be driven to work. So you make a good point there.
Yeah, we did a survey of business brokers. Now we're in the South Florida area. But we did a survey of business brokers and said, hey, how many times does a business owner come in your door and you say, hey, I can't sell your business? And they said 85 to 90% of the time, right, they turn business owners away because their businesses are not sellable. Their businesses are jobs. And I mean, I shared with you before, I love to share with people. One of our first engagements as we were going along, we do business valuations. We do so much more than what people think of financial advisory firm. And we had a call to consult with a client down in Miami, and the client is an immigrant, came from a Middle Eastern country and built a recycling firm that recycles technology, computer screens, cable boxes, where they would take the innards out and they would ship them off to a foundry and melt them down, and then they would get paid on the price of the precious metals. And that was how they made the revenue. And they were fantastically well run, huge organization. We did the numbers on it and sat down with the business owner and said, congratulations. The numbers that are reported on your tax return would say your business is worth, $38.5 million. Build it in 5 years, $38.5 million.
Very impressive.
And the business owner said, yeah, I'm going to drive it to 100 million, then I'm selling it and getting out. And I said, well, hold on a second there. It's worth nothing. It's worth nothing to sell it. The numbers would say it's worth $38.5 million. But an M&A firm or an acquiring firm is going to come in and take a look at the structure of your business and the process that you undertake in your business, and they're not going to pay you a nickel. And it kind of offended him in his hard work. But what we were able to say was, hey, Mr. Client, who makes the phone calls and has the relationships with the foundries in Japan? You. Who has the relationships with the people who decide to sell you their refuse so that you can break it down? Who has the relationships with Homeland Security and ICE to bring in the confiscated fake cell phones to break them apart? You. Who makes every decision on the manufacturing or demanufacturing floor? You. Who oversees all the administration in the business and has their fingers on everything? You. Who does the cut? You. And you could boil it all back down to that one owner. And it's kind of like the hub and spoke, the old airline model where Atlanta's the hub. And I told him, I'm not paying $40 million for your job.
Right.
I don't want to work 365 days a year, 24/7. If I pay anybody who pays $40 million for your business, you're still going to work for them. You're going to work just as hard, So really, he sat back, and it was kind of the epiphany of, I've got a lovely baby, but it's not that pretty. What do we have to do to make the baby pretty? We joked about it. Hey, somebody's got to tell you the baby's not pretty.
Yeah, that's not an easy conversation, especially telling someone who's built such an amazing business. They're going to end up, if he met his next goal of 100 million and was thinking he was giving that on to his family or his wife, or if something happened to him in the process before he changed up, then where would he be?
Yeah, and there are techniques and strategies that we can plan that his family would benefit if something happened to him. But what happens to the business?
Right.
We talk about exit planning and succession planning, and really a great litmus test when you talk to an advisor, a financial advisor, because they all say, oh, we do succession and exit planning, is to say, what's the difference? And they believe that it's the same when it isn't. Succession planning is the development of leaders within your business so that if someone's out for a prolonged period, that next person is identified and prepared to move up into that job so that business doesn't miss a beat. That's succession. It's a leadership process within your business. Exit planning is really just that. How does the owner leave the business when he wants, how he wants, selling it to whom he wants? Does he want to sell it to a third party, to the employees, to his family, and also get what he wants or needs from that business? And so that obviously that takes time to plan and strategize. And also, we don't do management consulting. That's what we said to the gentleman in Miami, and we could help him a little bit more now, but it was really challenging his mindset of how was he going to run his business. Was he going to work on his business, or was he just content working in his business? And that's where you see the difference of taking it to the business broker or the M&A specialist, and they say, we can't sell your business. And a lot of the small businesses you'll see when they say they don't transition down or they fold is because it's not been built to sustain the owner leaving.
Yeah, it's such a thought-provoking question for the business owner to be thinking about this. And if any of our listeners out there right now have a comment or a question, please feel free to put it in the comment box and we'll answer it. Or if on replay you have a question, feel free to comment and we'll circle back on that. But I think it's so good to be thinking about that, because I do know so many business owners, including myself, we just focus on what do I have to get done? What do I need to be doing? And we get in the business that we forget to step back and focus on, okay, what's my work on the business? Have I planned for this? What am I doing? Right.
And it's funny because I think a lot of people will look at it and say, well, I don't have a manufacturing business. I can't, I'm a professional. But there are actually, one of the great resources we utilize in coaching business owners are, there are ways to build different revenue models into a professional business, into a CPA firm, a law firm, a doctor's firm. If you're a doctor and you're not considering some element of concierge medicine to your best patients, right? In doing that, what you're doing is building a recurring revenue stream for the practice. And that, if you looked at just trying to build those elements within a business and taking the owner out, the example is the ADT, the home security company. If they had $1 million of installation business and $1 million of servicing business, and you are looking at valuing those revenue streams to sell that business, the $1 million of installation gets valued at about anywhere between 50 to 75%. So maybe you get $750,000 for that $1 million in business. That recurring revenue stream of the monitoring gets you 2.5. So that gets you 2.5 million, right? So that's where the owner all of a sudden starts saying, hey, I can change the model of how I do my business to remove me from having to be the contact point of all business. And then that better empowers them to sit back and they can put somebody in there or outsource it or do those things that makes their business more sellable. That if Jason or I or you or someone else wants to come in and buy their business, they want to buy the revenue stream. They don't want to buy the job. They want to buy the revenue stream that the company or the business spits out.
Yeah, and I think that's a really good point too, that even if you're a sole professional, you can still generate a reoccurring revenue stream, and you should be thinking about that and ways to do that. So I think that's a really, really good point.
There was a great book written by a gentleman by the name of John Warlow, and it's called The Automatic Customer. And in that book, he talks about the 9 different types of recurring revenue stream. When you think about the best perfected recurring revenue stream is Amazon Prime.
Oh, yeah.
You can sign up. It's $120 now a year. You can sign up for Amazon Prime, and they have 100 million Amazon Prime members. So on January 1st, what's that? $1.2 billion is the revenue. That's brilliant. Powerful impact for Amazon. And what it also does is I'm more I'm more apt to go to Amazon when I buy because I'm a Prime member and because and so those sorts, when you start to be aware of those recurring revenue models as a business owner, you want to take the time to sit back and work with a coach or work with someone who's helping provoke those thoughts of how could you do this differently? How could you go from a fee-based service to a subscription-based service or a value-based service? Or how can you build these different models into your business and lead the charge? Because it's going to make the difference when it's time to cash in on your legacy.
Yep.
Michael, I think you've made some really good points. You've given some food for thought for our listeners to really be thinking about. I want to encourage our listeners, if this is resonating with you, if you need to be giving a little more thought to residual income streams, thinking about, are you working too much in your business? Do you want to work outside of your business? I really encourage you to reach out to my website. We can further this conversation. I have a spot in there where you can do a business health checkup. It's an hour free consultation with me. We can talk about your business. And what I have to offer is advisors, specialists. There are a lot of different ideas and collaboration that we can bring to your business that really help it excel. So with that, Michael and Jason, what kind of closing remarks do you have for our listeners? And Jason, you can, if you have one, jump in first.
Sure. I think everything that we discussed today, for any of the listeners out there, just take it to heart. We're really here as a team. And I mentioned that the team is very strong. We're here to collaborate for your benefit. And ultimately, like I said in the beginning, client first, client always is the motto that we follow. And whatever it is, we're here to help and move things forward. Basically, put you in a better position tomorrow financially than you are in today.
That's a really good point. And I love the client first. And that's why we're here, because we all have that shared value. And Michael, the final closing comment from you?
Well, first off, Michelle, I want to thank you and for having this forum is, again, leading innovatively and reaching your client base and potential client base. And we're very, very happy to be able to participate and work with you collaboratively for clients. I would just ask those folks who are listening, if you're currently working with a CPA and that CPA is not working with your advisor, or maybe you're trying to do your own financial advisory work, but you're not communicating with your CPA, what is there that there's all that and there's a bucket of items you don't know, but there's a huge realm of things that you don't know.
Right.
When do you want to find that out? And when you're working with a team of people who collaborate, our job working together is to design and develop your fact pattern and find those holes and those weak spots and work together to solve them, and to present the client with the optimum solution and let them choose. And we've had clients say, yeah, no, not for me. And that's fine. Our job is to find the solution, not to sell a product or a portfolio or a strategy or what have you. So we really appreciate you, number one, having that vision as a CPA. Folks, if you don't realize it, less than 10% of the CPAs have the perspective that Michelle has. And I want to applaud that, because it's the perfect type of advisor and professional that we find that we love to work with, because we get to solve real problems.
Right. Thank you, Michael. So thank you, Michael. Thank you, Jason. I really appreciate you guys coming on the show today. For our listeners, we are going to continue make this a new series. We'll be back on probably the last Wednesday of February with another installment. We'll bring another specialist on board to give you some business advice. So please look forward to hearing from that. And then I'll be back here next week. I'll be talking about PPP loans. So whatever you need to know about first round, second round, or how to get forgiveness. So thanks for joining in. I do see one comment. Let me just just thank yous from our listeners. But so we'll just wrap it up here. But thanks, guys, for being here, and look forward to working with you.
Thank you. Look forward to it as well.